Hey guys, I wanted to come to you today to talk a little bit about land contracts. You may have also heard of them as rent to own or seller finance. Every time I post a house on social media, inevitably someone will come to me and ask me about rent to own, land contract, seller finance. We're going to lump them all in the same thing. And a lot of times people come to ask about that type of financing because maybe they have bad credit, they don't have a down payment, they can afford the monthly payment, but they're having trouble getting additional money secured. It's really just a different way that people can sell a house. But just like anything, there are issues. And so I want to talk about those, and I want to talk about why they are not a really popular way to sell a house right now. And both from the seller perspective and from a buyer perspective. So one of the things to note is that a land contract is simply an agreement between a buyer and a seller that there's a contract involved, and that the seller will sell the house to the buyer for making monthly payments. However, instead of like with a mortgage where the title or ownership of the house and land it's on is transferred at closing, when you get a mortgage or pay cash for it, the seller obtains the what is it called? It's legal title. I'm sorry. So the buyer will get equitable title, but the seller maintains the ownership of the property. Why that's important to distinguish is because there still could be liens placed on the property because of maybe not paying taxes. Or mortgage if there is one on there. Some mortgage companies don't allow a land contract to happen on the mortgage that's being held. It's basically, you can kind of also think of it as the seller then is the bank, right? So instead of you have a seller and a buyer, and then a bank that's going to lend the buyer money and pay the seller's mortgage off or pay the seller for the home. The seller is both the mortgage holder and the seller, and is the buyer is then paying them. Here's why it's so popular. Again, because people are having trouble saving for down payments. They feel they have bad credit. They are assuming they can't get a loan without even talking to a lender. So whenever anyone asks me about a land contract or rent to own, I always ask them if they've talked to a lender. And I will explain why it's so important to talk to a lender, because you might not even know what you qualify for. And B, there are so many programs out there right now. There's down payment assistance programs with MISHDA. I just saw a credit union advertising no down payment, no PMI, private mortgage insurance. And there's just so many options out there right now that I would challenge you, if you have not spoken with a lender, that's going to be the first thing I'm going to ask you is if you've spoken to one, who you've spoken to, and are you willing to get a second opinion? I think that those things are super duper important. One of the reasons why I do this is because I feel that homeownership should be in the reach of everyone. And if you haven't talked to a lender and you're just kind of trying to fix your credit on your own, a lot of times you're throwing Jello up on the wall and seeing if it sticks. A lot of my mortgage friends who create programs for clients actually will create a very specific path for you to go down to get your credit high enough so that way you are able to get a loan. And so I think that that's very important that you actually talk to the expert in that field, because until then we just don't know what we don't know. The other thing I would say is that a lot of the land contracts, seller finance, rent to own happened when the crash happened and houses weren't selling a lot. And so sellers would say, well, you don't need to go to a bank. You can just come to me and make the payments to me. That worked out for a while and it worked well. The thing is, though, is now we're not in that cycle and interest rates are so low that it's really not wise on the buyer's part to do that either. When I say that, what I mean is that traditional mortgages, whether it's FHA, VA, RD, conventional, or whatever type of mortgage you get from a lending institution, those are regulated. So your interest rates are regulated and driven by the Fed. When you do a land contract, rent to own, or seller finance, there is not a regulatory body that says seller can only charge X amount in interest. So sometimes, and I'm not saying every seller, and I'm also saying that it's not every time, I'm not painting this with that broad of brush. You may know someone that had a seller finance or rent to own, and it was just great. Historically, though, I've seen them not work. And one of the reasons is because it's not regulated, a seller can literally charge whatever they want in an interest rate. So let me put that into perspective for you. Right now, banks are less than hovering around 4% for an interest rate. A seller in a land contract, rent to own, or seller finance deal could charge you 11% or higher. That is crazy. And it's also taking advantage of you if you maybe don't have the credit yet or not the down payment that you're going to need. They can also put very weird qualifications or even run credit bureaus on you. So it's really the same as using a lender. They're just able to charge you a lot more. And in the long run, that's really not what we want for you. What we want for you is to make smart decisions. We being me as a realtor, I want you to make a smart decision for your family, and I want it to be a financially viable option for you. And that may mean waiting 6 months. That may mean waiting a year. But I promise you, if you work with me and you work with a lender, you're going to get into a very strong financial position, one that will enable you to purchase a home and have home security for your family. There are also ways that what they'll do, what in the land contracts or seller finance rent to own, they'll keep your payments for, say, maybe like the first 3 years or 5 years, and then you're required to do a balloon payment. And that's usually where I see things fall off the rails, because you're humming along and everything is great. But in the meantime, you have not saved your money for your big balloon payment, nor have you worked on your credit to get you credit worthy to get a mortgage. And so the problem then is at the 3 or 5 year mark, whenever the balloon is due, you are not credit worthy and you can't get a loan. And so the problem is those 3 or 5 years or whatever leading up to it, you've basically rented and gotten no equitable value out of what you have spent. So I know that I'm talking about this as it's a very negative thing. It does work in certain locations and certain circumstances and for certain people. However, it's my experience that really you should first and foremost ask me and then ask a lender and partner with a team who's going to get you in a position to purchase a home, whether it's now or later. But really what we want to do is define that path for you So then that way, eventually you can borrow money and or save up money and purchase that home that you've always wanted. So I hope that helps a little bit. And if you have any questions, I'll put my information in the comments and you can certainly reach out to me. I've got some amazing lenders that I work with all different types of lending programs, as well as credit repair. So thanks so much for tuning in, and I hope to help you in home ownership soon.